This video is on financial aid, the three different types, and a high-level overview of how you obtain the three different types of financial aid, which is private scholarships, merit scholarships, and need-based aid. My name is Tim Higgins. I have two books on Amazon, Pay for College Without Sacrificing Retirement and Unconventional Investing, and I teach classes based off of the information found in both books. You can find a seminar schedule on my website, collegeplusretirement.com. You might think that the families who receive the most financial aid would be the families with the most need. In fact, this is not necessarily true. The people who receive the most aid are the people who best understand the aid process. Princeton Review. Is that fair? Maybe not. What can we do about it? Not much. So what we want to be dealing with is reality, not theory, or arguing about what's fair and what's not fair. We need to understand the process, the way it's set up, and maximize our own opportunities. I like to flip the thinking here to expand your thought process around this topic. If you were managing a college's financial aid department and you have a specific budget or a pool of money, do you want to give families financial aid? Do you want to increase financial aid for specific families? Do you want to give more than what families qualify for or ask for? Maybe not, unless there's something in it for you, the college. And I'm going to expand upon that in more detail. So three terms to be familiar with are reach, target, and safety schools. And by definition, a reach school would be where the applicant has below average statistics, whether that's standardized test scores, GPA, class rank, than the average student attending that school. Target would be in line, and safety would be where the applicant has above average. And gaining admission to that college would be viewed as a safety bet, hence a safety school. So the reason why this is important is because when it comes time for, or if you're seeking merit scholarships, you're probably going to find this from your safety school options, not the reach school options. So some parents scratched their heads saying, well, we didn't get any aid, and the students only applying to reach schools, and they're wondering why. Need-based aid aside, but they hear about their friends obtaining thousands of dollars in scholarships. It's because primarily that there may be some merit scholarships on the table, and you have to expand your paradigm to include the safety schools to get those awards. So just wanted to plant the seed with these terms because we'll talk about merit scholarships in a second. And just as a visual and just a hypothetical, in DC you have three schools, all excellent schools, but for a specific applicant, Georgetown may be a reach school, George Washington a target, and American University a safety school. So having all three in the mix provides more options to the family, and when making a buying decision, you want to have more options. So there are three different types of financial aid. The first one are private scholarships, made up of either national scholarships or local scholarships. National ones, for example, there are a lot of search engines, fastweb.com or scholarships.com. Even through College Board, you can search these out. There are thousands of them. That's the good news. The bad news is the applicant pools for these scholarships are very large, so the odds of winning may be very small. Local scholarships, on the other hand, may not offer the same dollar amounts in terms of awards, and oftentimes it may be $500, $750, or $1,000, but the applicant pool is going to be very small. Having been on a scholarship committee myself, I can tell you it doesn't always go to the students with perfect standardized test scores or high GPAs. A lot of times it goes to those who have proven that they need and want and have put forth the effort and really would value the scholarship. So that's why it's really more inclusive, and anybody can win these scholarships. Now, the one thing to be sensitive to is that technically, we're going to get to need-based aid in a second, but if your daughter, hypothetical, wins 10 of these awards, $5,000, and was offered some money from a college in need-based aid, that college may reduce that financial aid offer dollar for dollar. Why? Because you needed less money because you won those scholarships. So that's just one thing to be sensitive to. I would still proactively seek those, and then if one asks the school if they could reduce loans instead of grants and scholarships that may be awarded through need-based aid, so you can open up that dialogue. But if you're the Gates family, Bill and Melinda Gates had some kids and applying to school, and they probably, because of their assets and income, wouldn't qualify for any need-based aid. As many scholarships they win in this private sector, that just cuts down on the total cost of college. So this is an opportunity for everybody. The biggest opportunity, though, as I talked about on the last slide, is our merit scholarships. Because unlike private, where you may be looking at three, maybe four-figure amounts, probably only good for 1 year, we're talking 4 to 5 figures, most likely good all 4 years. This is the biggest way to discount the price of college. This is where safety schools that offer strong scholarship dollars, that's how you cut down the price dramatically. Um, and it's nice to have a couple of those, if possible, within your portfolio of schools that the applicant's applying to. So, who wins merit scholarships? Well, it could be for any reason that that school would want that student. Could be talents, could be standardized test scores, class rank, GPA, could be athletics, could be the arts, could be ethnicity, could be geographic location of that student if that college doesn't have anybody from that area. So you never really know. But again, the trade-offs with all of these, there's always pros and cons. It's not going to be the reach schools. It's not going to be the most selective schools that the applicant's applying to that would be awarding the merit aid in most cases. And Ivy Leagues go on record by saying they do not offer any merit aid. But typically the Ivies do have very strong need-based aid programs. Need-based aid is based off of income and assets and can be awarded in two different types, gift aid and self-help. Gift aid sounds nice, and it is nice. It's grants and scholarships, and self-help is sounds less nice, and that's true. Well, that involves and entails work study and loans. Not that you want to pass those up, because work study would certainly be a resume builder, provide some extra income to the student, and the loans may be 0% while the student's in college. But of course, more grants and scholarships would be better. And you can look up how colleges typically award those financial aid packages in what ratio of gift aid to self-help aid. And they're just averages, but it's nice to know those numbers. And you can do that at College Board, and I'll show you that on the last slide. So focusing a little bit more on need-based aid, it's driven around this expected family contribution, acronym EFC. And it's almost like a deductible for health insurance. You're paying up to a certain amount before the assistance kicks in. Some parents get upset and think, you mean they're telling me that I can afford up to that amount or that I can pay that amount? Well, don't interpret it that way. It's just, it is what it is. There is going to be a dollar amount that you'll be expected to pay before need-based aid kicks in. And how that number's calculated is based off of assets and income. Enter in all your information. Your EFC is generated almost like doing your tax return. Enter in all your information, and a certain amount is due or expected from you. And you can actually calculate this for free at finaid.org, collegeboard.org. They have free EFC calculators. And this is valuable information to know because this is setting the expectation as to, well, what will I be expected to pay in the need-based aid process at every school? And if the answer is zero, excuse me, if your EFC comes back and you're qualifying for no need-based aid, well, wouldn't you want to know that in advance that you may be paying sticker price at all these various colleges? I know everybody would like to qualify for financial aid, but it is what it is. You're either going to qualify or you're not. So I think knowing that in advance helps you plan around creating that college list. And I'll give you two scenarios. Number one, you might then say to yourself, well, let's go after merit scholarships. It helps steer the process. Or doesn't that in-state public university, whose sticker price is a third of what private colleges may be costing, doesn't that look a lot more attractive and a better return on your investment at this stage? So it just helps formulate your thoughts as to how you want to go about approaching this. Primarily, EFC is driven off of income. Yes, assets are taken into consideration, but income is the primary driver here. And just to give you a feel for a rough estimate as to what your family may be expected with one in college, you can go on the left-hand column and see the different income amounts for various families and what an EFC may look like on the right-hand column. So don't look at this as being a precise calculation because every family's, even if all the family's income was the same, five different families with income of 150 may have different EFCs based off of the assets that they have. But this will at least give you an idea that yes, if your income is in the 250 range and your EFC is going to be 70,000 or more, the expectation should be that you would not qualify for any need-based aid. Now, having said that, if let's say your EFC was 70,000 or more, I typically still recommend you complete the financial aid forms. Why? Well, as you'll see on the next slide, if you're going to have two in school at the same time, you may still qualify in overlapping years. In addition, a lot of colleges require you to fill out the financial aid forms to qualify for merit scholarships. In addition, the government, to get the best loans available for college, you have to have completed the financial aid forms. And finally, life happens. Some people lose their jobs, some people pass away. Unfortunate circumstances can happen, or changes in someone's financial situation can be drastic at times. If that's the case and you want to go back to a college junior year and then you start filling out financial aid forms, you may be swimming upstream slightly because you haven't been putting into the process from the very beginning. So just something to be sensitive to, and that even if you have a high EFC, there are still reasons why you would want to complete the financial aid forms. Sometimes walking through some scenarios help paint the picture. COA, cost of attendance, that's tuition, room and board, books, fees, travel expenses all rolled in, whatever the college is listing as their cost of attendance on various websites like College Board or collegedata.com. And if you were to look at your in-state public, and this is just rough estimates, it's not even really the true accurate number, but being in Massachusetts, if in-state public was at 25,000 for cost of attendance and what's expected from your family's 40,000 in an EFC, well, how much need are we qualifying for? None. The expectation should be when you go out to the mailbox and get your financial aid award that there won't be anything there necessarily. If you're applying to a private college, higher sticker price, they may factor in some additional assets like home equity to a certain degree. That's why I'm bumping up EFC slightly here in this hypothetical. So it costs more, but what's expected from you is slightly more, but there may be a need there. And it's from that need number here being 15,000 that a portion would be grants and scholarships and a portion would be loans and work study, gift aid, and self-help aid. Now let's get into that scenario of EFC of 70,000 or more, but having overlapping years where two kids are in school. So if the EFC was 70,000 for a family and the son goes off to Bates College, he's a freshman, he's a sophomore, doesn't get any need-based aid, but you are filling out the forms. And then junior year, he enters junior year at Bates, and that daughter enters for her freshman year at Colby. Well, now that there are two in college, and let's assume your income and assets didn't change drastically over that time frame, we're utilizing the same resources to pay for two educations. So that EFC number is going to be cut in half or discounted at each school, 50 to 60% of the original number. So let's just use 60%. So if we're looking at the EFC being 39,000 instead of 70 for the son now, and 39,000 for the daughter, that leaves a delta or a difference of 26,000 at each school. And typically these types of schools, 80 to 90% of whatever need is being shown would be met with quote unquote free money grants and scholarships. So that's those are definitely dollars that we want to pursue. So in 1 year of overlap, you're looking at 52,000 being the difference. 2 years of overlap being a little over 100,000. And here's the key to this: if we're thinking about this holistically, we're not putting forth 90% of our efforts to figure out how we're going to pay for the son's first year of college. And I understand that that's kind of a mental block. It's hard for people to realize the game plan until they dive into it. But if we take a step back and analyze this and looking at retirement at the same time, we're thinking, all right, how do we get through, and in the Jones family scenario, 6 consecutive years of college payments? And if we're looking at it that way, instead of how we're just paying for the first year for the oldest child, if we're looking at 6 consecutive years, knowing that if we did proper planning and filled out the forms, that they'd be qualifying for some aid, not passing up on that, 100,000 of assistance in those 2 years of overlap certainly helps that total number. Again, what's ever saved through the college process and how efficient we can be is directly tied to you, the parents, and what's left over for retirement. So all these goals are interlinked. So we want to think about this holistically, but another reason to be filling out the financial aid forms. And lastly, here's just an example of how you could create a comparison list of various schools and figure out what's going to be the net cost to you, so that when it comes time to pull the trigger on your buying decision, you can think about this more rationally. And I totally get it. This is a huge emotional decision, but it's also a financial decision. It's very similar to buying a home. So we want to combine fit, feel, and the financial aspect. Fit to the student. Does it offer the programs that they want to pursue? Feel, they have to be happy there. We don't want them to transfer. That's wasted dollars. But also financial. It's got to be affordable. So it's just like buying a home. Now, I'm using the same EFC across the board here just for simplicity's sake. So if we had an EFC just under 17,000 for this family, we can then apply it to the cost of attendance to attend various colleges. If we're looking at the in-state public, costing about 29,000 minus what's expected from the family, a need of 12,000. We can look up what percent they typically meet. These are just averages, but it helps, and that's College Board where you can look that up. 80%, so the financial aid package, even though we're showing a need of 12,000, may be just under 10,000. Of that 10,000, how much would be gift aid, grants, and scholarships? 46%. How much would be self-help? 54%. Again, we can look up those numbers at College Board. Now, if we subtract the gift aid, that's grants and scholarships, free money, from the cost of attendance, that's the final number that I put in there, the net cost. Almost think like if you're buying a car, what's the invoice, right? So sort of bottom line to the family. Because self-help aid does either have to be worked off or paid back in the form of a loan, even if it's a low-interest loan. Now, if we go out of state, which is a whole different discussion, now the price tags jump up dramatically. But yeah, UNH, we're looking at 45,000 minus what's expected from the family. A much bigger need here. Need met, just under 80%. So we're showing a total financial aid package of maybe 22%, gift aid 40%, self-help aid 60%. Net number, now we're roughly around 36,000. UVM, even more expensive, over 50,000. Out of state, minus what's expected from the family, showing a need, 37,000. They meet 70% of that. Aid package being 26,000, of which 68% would be grants and scholarships, approximately a third self-help aid. Net number, again, 36,000. Roger Williams, being a private college, little over 50,000 minus what's expected from the family, showing a need of just under 34,000. Percent need met, 83%, of which 71% would be gift aid, 29% would be self-help aid. And then finally we have the more expensive private school being Boston College. In this example, 65,000 per year, minus what's expected from the family, showing a need of 49,000. And here's a key with some of the higher price schools: 100% need met. So if you're showing any need 100% of that will be met somehow, some way. 80% of which is in the form of grants and scholarships, so 39,000. 20% self-help aid, net number 26,000, which in this example would be interesting because then even though you were scared off by the price at first, you're seeing that it's fairly close to the in-state public number, and now you can have some talking points, some discussion that can be had here as to what's the right buying decision. Now, that's also, again, like I said, for simplicity's sake, I use the same EFC, but real life would be that BC's EFC might be higher because they may be assessing some portion of the home equity or some other assets. So it may not be as generous, but you get the point of the exercise here. Crunching the numbers helps you evaluate what a good buy would be for the family, but it also sets expectations as to what would be coming back to you in the form of a financial aid offer on the need-based aid end. Now, what if your EFC was 70,000? Well, that changes the discussion because, like I said before, now you can assume with only one child that you wouldn't be getting need-based aid at any school. So if you're looking for any type of discount, you may want to be applying to merit scholarship opportunities or schools that would offer that. Or now you look at UMass's cost of attendance compared to some of these other schools, and it may look more attractive, or your in-state public, wherever you're located. So this just helps you formulate how you want to approach this and make a better buying decision. Now there's another way to do this. So this is sort of the long form version where you're plugging and playing and doing your own research and putting together your own spreadsheet. But some schools have excellent net price calculators embedded within their website. And if you go into and find the net price calculator, for example, at Roger Williams University and enter in all your information, assets, income, and so forth, and the key is accurately, then what's going to be kicked back to you is a rough draft needs-based aid financial aid offer. So you know what to expect when applying to that school. Now, some of these schools don't have excellent net price calculators, and you may even pick up on that once you start to do a few of these. So the accuracy may be kind of questionable, and you may want to make your own spreadsheet as I did, looking up the numbers through College Board. But either way, it's providing you with valuable information well in advance of applying to these schools. It's setting proper expectations, and again, ultimately, to make a better buying decision.